Welcome back to the Pro Ticker Podcast, your Monday morning edition covering major financial magazine headlines, everyone.
Good morning. Though, looking at the screens right now, good might be a bit of a stretch.
Yeah, that's the understatement of the year. It is Monday, March 2nd, 2026. And honestly, the geopolitical risk map we had on Friday afternoon has basically been shredded over the weekend.
Completely shredded. I mean, the world looks fundamentally different today.
Right. I've been glued to the terminal since about 4 a.m. And the volatility we are seeing is, well, it's unlike anything since the early 2020s. And even that feels like a pretty poor comparison right now.
It really does. We aren't talking about, proxy skirmishes or saber rattling anymore. This is direct kinetic conflict involving the United States, Israel, and Iran. The financial press is just an absolute overdrive this morning.
Which is exactly why we're here. I've got a massive stack of printouts right in front of me. Fresh reporting from Bloomberg, CNBC, and Yahoo Finance. And the mission for this deep dive is to really just help you cut through the panic.
Because there is so much noise out there right now.
Exactly. We need to figure out the actual financial and economic implications of what just happened. But amidst all that noise, the market signals they're getting seriously crossed.
Yeah, they are.
I mean, we are seeing some textbook moves, obviously. Gold is doing exactly what you'd expect, hitting record highs. But then we have these total anomalies. I'm looking at the bond market. And the reaction in U.S. Treasuries is completely baffling if you're just trading off the standard war playbook.
Right. It's a massive anomaly.
Yeah.
And it's a signal that investors are terrified of something much stickier than just the conflict itself. And then on the periphery, you have these reports of cyber warfare that are, frankly, they're stranger than fiction.
Oh, the calendar app stuff.
Yes, battles literally happening inside a calendar app on people's phones.
We are definitely going to get to that digital front because it is wild, but we really have to start with the kinetic front, the geopolitical earthquake, as Bloomberg is calling it.
Let's do it.
So looking at the timeline of the airstrikes launched on Saturday, February 28th, the scale here is just staggering. This was not a warning shot.
No, not at all. It was a decapitation strike. The headline that changes history here is the death of Iran's supreme leader, Ayatollah Ali Khamenei.
Right.
He ruled for 36 years. That is an entire generation. And his death creates this immediate, massive power vacuum in a region that really cannot afford any more instability.
And that's the core issue, right? You remove a figure who has centralized power for nearly 4 decades, and you don't just get a new leader, you get a scramble for control. And looking at the CNBC reports, the U.S. objectives here were completely explicit. President Trump did not mince words at all.
He really didn't. Just to report what's in the text here, Trump stated that the goal was to destroy Iran's nuclear program and potentially remove the regime entirely.
Which is a maximalist objective.
Exactly. And he gave a timeline, too. He warned that combat operations could last 4 to 5 weeks.
Right. And his latest statement this morning says they are ahead of schedule. But, 4 to 5 weeks is an eternity in financial markets. That's a full month of total uncertainty. And obviously, the Iranian response wasn't just to wait and see what happens.
No, the retaliation was immediate and it was widespread. We're looking at reports of waves of missiles and drones fired at Israel, but also directly at U.S. bases in the UAE, Qatar, Kuwait, and Saudi Arabia.
It's the nightmare scenario for the Gulf states.
Exactly. They're the battlefield now.
And we have confirmed casualties, which changes everything. CNBC is reporting 3 U.S. service members were killed in these retaliatory strikes. That instantly changes the political calculus in Washington. It hardens resolve and makes de-escalation almost impossible in the short term.
It does. And we have to look at the naval component as well. Trump is claiming that U.S. forces sank 9 Iranian naval vessels and largely destroyed their Navy headquarters.
Wow.
So for you listening, the real takeaway here is critical. This is a direct war involving the world's most critical energy producers and the U.S. military. It is not a shadow war anymore.
Which naturally brings us to the asset class that acts as the global nervous system.
Yeah. Energy.
I'm pulling up the charts from Yahoo Finance right now, and it is just a sea of green. WTI crude is surging over 8%. It's topping $72 a barrel. Brent crude is up nearly 9%, hovering right near $80.
And honestly, that spread is going to widen. This isn't just traders speculating on risk. This is about physical choke points.
The Strait of Hormuz.
The absolute jugular of the global economy. Roughly 14.5 million barrels of oil flow through there every single day.
And I think the stat is that about 90% of that goes to Asia, right?
Yes. It's massive.
Yeah.
That is about 20% of the world's total consumption passing through a waterway that is now effectively an active war zone.
And the reporting from Bloomberg this morning is that traffic has just effectively halted. It's not just that ship captains are scared, it's the insurance markets. You
Right.
literally cannot get a policy to sail a tanker through there right now.
Exactly. And if you can't insure the cargo does not move. I was reading a note from Saul Kavanik. He's an analyst at MST Marquee, and he told CNBC he didn't pull any punches at all. He said a prolonged closure could drive oil prices into triple digits.
Triple digits, like $150 oil.
Easily. If 14 million barrels a day are taken off the market for a month, we are talking about a supply shock that rivals the 1970s.
And it's not just the shipping lanes that are the problem. The infrastructure on land is getting hit, too. There was that drone attack over the weekend on Saudi Aramco's Ras Tanura refinery.
Right, the world's largest oil processing facility. Now, they did report a limited fire, but that's almost beside the point. The point is that it can be hit.
Yeah, the vulnerability is exposed.
Exactly. The risk premium on every single barrel of oil just skyrocketed because there is no such thing as a safe facility in the Gulf right now.
And for the consumer, I imagine the immediate impact is just a fear of supply chains totally breaking down. I know Saudi Arabia is scrambling for alternatives.
They are. They're looking at contingency plans to move oil via the Red Sea East-West pipeline to bypass the Gulf entirely. But let's be realistic here. That pipeline has very limited capacity. You can't just reroute 14 million barrels like you're changing lanes on the highway. The logistics simply do not exist.
So we have a massive supply shock, a logistics freeze, and a war premium that usually creates very clear winners and losers in the equity markets. I'm looking at the pre-market movers, and if you are holding airline stocks today, you are getting absolutely crushed.
It is a total bloodbath for the travel sector.
Yeah.
Bloomberg is calling it travel chaos, but for the actual balance sheets, it's a total disaster.
Lufthansa is down 11%. IAG, which is British Airways' parent company, is down 13%. Singapore Airlines down 7.5%. Qantas down 10%. I mean, double-digit drops in massive cap stocks in one morning.
Yep.
That is pure panic selling.
But look at why they are selling. It's not just the jet fuel prices spiking, though obviously that hurts. It's the airspace itself. Major airspace closures across the Middle East. That area is the crossroads of the world for aviation.
Right.
You close that airspace, and suddenly a flight from London to Singapore has to divert hours out of the way.
Right, so you burn way more fuel to fly fewer passengers on a much longer route. That completely destroys your margins.
Precisely. And look at the specifics with Emirates. They halted all operations to and from Dubai until Tuesday. Think about that for a second. Dubai is the busiest international airport in the world, and it's essentially closed. The ripple effects for global commerce, not just tourism, but cargo and business, are massive.
Right. Conversely, though, capital is amoral, and it's flowing very quickly into the sectors that benefit from kinetic warfare. The defense primes are rallying hard.
It's the War Trade 101. CNBC is reporting Lockheed Martin is up roughly 7%, RTX is up, BAE Systems over in London is up 5%. The market is already pricing in the massive replenishment of munitions.
And the energy majors are just drafting right off that oil price spike. Exxon and Chevron are both up around 4%. Equinor in Norway is up over 6%.
Which totally makes sense. Equinor is safe. Geographically, they aren't near the conflict, but they sell their oil at the global price. They are the perfect hedge right now.
Okay, so the stock market is behaving somewhat rationally. Defense is up, travel is down, energy is up. But let's get to that anomaly I mentioned at the top of the deep dive, the bond market.
Yes. This is where you really need to pay attention because this is the most important signal out there right now.
Usually when missiles start flying, investors dump stocks and they buy U.S. treasuries. It's the classic flight to safety. Demand goes up, yields go down. That is the playbook we've seen work for 50 years.
Correct.
But that is not happening today. I'm looking at the 10-year treasury yield, and it is rising. It's pushing up to roughly 3.97%. The market is selling bonds during the outbreak of a major war. That just feels wrong.
It feels wrong until you look at what the market is actually afraid of. CNBC had a great analysis on this. The market isn't just afraid of the war itself. The market's terrified of what the war brings, which is inflation.
Oh, stagflation, really?
Exactly. This is a stagflation nightmare scenario. If oil goes to $120, the cost of everything, logistics, manufacturing, food, it all spikes. That is inflation. And inflation destroys the value of the fixed payments you get from a bond. So investors are looking at this and saying, I don't want to hold a 4% bond if inflation is heading to 6%.
So the fear of higher costs of living is overpowering the desire for safety.
Precisely. This is a crucial distinction from typical risk-off behavior. And it puts the Federal Reserve in an impossible box. Think about it. The economy might slow down because of the war, which is a recession risk. Normally, you cut rates to fix that. But inflation is spiking because of the oil shock, which means you actually need to raise rates.
They are completely paralyzed. They can't stimulate the economy without feeding inflation, and they can't fight the inflation without crashing the broader economy.
That is exactly why yields are rising. The market knows the Fed is trapped. There is no Fed put to save them here.
That is a terrifying thought. The central bank has basically lost its leverage, but investors are finding safety somewhere else. Gold is doing its job perfectly today.
Gold is acting as the classic safe haven. It topped $5,400 an ounce, up more than 2%, building on previous gains. Silver is up too. Gold is the only asset that works in this specific stagflation plus war scenario.
Okay, let's pivot from the oldest asset class in the world to the newest form of warfare. We teased this earlier, the cyber front. I was reading the CNBC piece on this, and honestly, it is fascinating.
The digital front is just as active as the physical one right now. CNBC reports that Iran is currently in a near-total internet blackout. Connectivity is down to 1% of normal levels.
Which we've seen before, right? As a regime tactic to stop protests or organize dissent. But there's something else happening here. Offensive cyber warfare.
Right. It's not just physical bombs. Let's talk about the Beid Saba app.
This is a calendar app, right?
Yes, a religious calendar app. 5 million downloads. It's a utility app used for prayer times and religious dates. It was completely compromised. But the hackers didn't just brick the app or steal user data. They used it to broadcast push notifications directly to the Iranian armed forces and the public.
And the message was wild. What did it say?
It urged them to, quote, give up weapons and join the people.
Just incredible.
Think about the psychological impact of that. You are a soldier, you look at your phone to check your schedule, and the app is telling you to mutiny.
It's modern warfare taking place right on your phone schedule. That is narrative warfare inside your pocket.
Exactly. And this follows previous hacks we've seen of Iranian state TV, showing speeches by Trump and the exiled Shah's son. It creates this internal chaos that directly compounds the military strikes.
It really emphasizes that this is a total conflict. Physical, financial, and digital.
And that totality is exactly why the broader economic fallout is going to be so severe globally.
Let's talk about that broader economic fallout. We focus a lot on the US and Europe, but CNBC put a big spotlight on India. Why is India specifically so vulnerable right now?
India is incredibly vulnerable because of their heavy reliance on imported oil. High prices completely wreck their balance of payments.
So an 8% jump in oil is effectively a massive tax on the entire Indian economy.
Immediately. And Air India has already suspended flights to the region. CNBC highlighted them because if a massive emerging market like India stumbles under the weight of these energy costs, it drags down global growth projections significantly.
And looking at the broader global markets, it reflects that fear. U.S. futures are down significantly. Dow futures dropped over 500 points. Asian markets dropped. But here is the real friction point. The economic calendar is still moving.
That's the problem. Investors are nervously watching the upcoming U.S. jobs report and the ISM manufacturing data.
Right, to see if the war jitters totally derail the broader economy. Usually we analyze that data based on domestic trends, but now we have to view it entirely through the lens of this war.
Exactly. If we get a weak jobs report on top of this massive oil shock, then the panic is really going to set in. A weak economy cannot handle a 1970s-style energy shock.
So, bringing this all together to wrap up our deep dive, we have a new massive war in the Middle East. Oil is spiking toward $80 a barrel. We have a highly confusing reaction in the bond market driven by inflation fears and massive disruptions to global travel. What is the final thought you want to leave everyone with?
It all comes down to the duration question.
Right. Trump says 4 to 5 weeks.
But the markets are pricing in the panic right now. The big question for you to watch this week is whether the Strait of Hormuz reopens, or if those tankers stay docked, because that determines if this is just a temporary blip or a true global crisis.
It's going to be a very long week watching those shipping lanes. We'll see you all tomorrow morning with new headlines from major financial magazines.